Nvidia has been on an incredible, once-in-a-lifetime style run, and Tesla has finally awakened from its 4-year slumber and is looking to go on another incredible once-in-a-lifetime style run as well. But you guys know Wall Street has an opinion on this that we have to discuss, but for me, only one stands out as a far better buy. So let's get Wall Street's thoughts on this, and I'll tell you which one I think is the far better buy. And yeah, guys, it's going to create some controversy, but hey, that's why you guys are here. You're here for the truth without the hype, and that's exactly what you're going to get. So make sure you like the video if you like getting the truth without the hype. And the biggest discount ever for my group is live for Cyber Week, so make sure you check out the pinned comment. Get your membership before that sale expires and the biggest discount ever goes away. But we'll talk more about that at the end of this video here. We got to get into the details of exactly what's going on and get you guys the answers for, is Nvidia the better buy or is Tesla the better buy?
Welcome back to Morning Trade Live. It's time to go inside out on two mega cap names, Nvidia and Tesla. Let's welcome in Ivana Delevska, founder and CIO of Spear Invest. Ivana, thanks so much for joining me at the desk here. Great to have you.
Thanks for having me, Caroline.
All right, so let's talk about Nvidia and chip makers overall, because we did see reports that the Biden administration could increase export controls to China. Doesn't seem like it's having much of an impact on any of the chip makers right now. Why do you think that is?
The expectations, Caroline, were for slightly more restrictions. So the news is slightly better than what we had expected. So that's why you're not seeing a major impact. We had already had pretty significant curves, especially on the high-end chips for the likes of Nvidia. So that was really when the biggest impact was felt. So the new restrictions are incrementally not better, but better than people had expected.
Okay, and before we get to Nvidia, I do also want to talk to you about another headline from this morning, and that, of course, is that Pat Gelsinger is out as Intel CEO. We are seeing Intel shares rally on the news, up more than 3% right now. Your thoughts on this change, really?
All right, so we'll stop right there. I actually didn't forgot Intel was even mentioned in this, so we'll touch on Intel real fast, and more importantly, a lesson learned with all this. When we had the giant 2022 crash, whatever the case was, there were a lot of folks out there talking about, especially Wall Street folks, talking about Intel was the play, Intel was the buy. I don't know about you guys, but obviously Intel was not the play at the time. Obviously you had Nvidia, crazy lows, AMD. There was all kinds of other chip players at those crazy lows that were just better buys in general, better companies in general. And that's why it's so important to ignore the noise and actually dig into the financials, actually dig into what's going on with the companies. It's not like Intel magically started having problems. They've been having problems for a really long time. It is a very legacy style business who has fallen. But I agree, there was a point in time when they were at the forefront, but that was a long time ago. And just simply because Wall Streeters like it or a YouTuber likes it or whatever the case is, you got to ignore that sort of stuff, because if you chose to go the Intel route instead of Nvidia or AMD or some of the others, you have missed out on an absolute, especially with Nvidia, you've missed out on a complete fortune betting on the wrong horse there. And that's the reason why I don't like to bet. And especially I hate betting based upon somebody else's opinion, because I don't know if they've done their due diligence or not. I don't know if they're just, their funds set up differently. They're planning a trade differently. I don't know if they're just friends with the CEO and they want to come out here and say nice things trying to help out the stock. Who freaking knows and who freaking cares? More importantly, ignore that noise and do your own due diligence. And hopefully that due diligence, if you do it properly, will show you Nvidia was the right play there, or anybody else other than Intel.
Well, it wasn't really a surprise to us, Caroline, because Intel had really struggled, and especially their foundry business is in a really tough shape. So we had expected that there will be a change. The market is expecting that potentially Steve Mollenkopf from the former CEO of Qualcomm would be a potential candidate here. We'll see what ends up happening, but I think it was needed, a CEO change was needed to make some more transformational impact here.
Yeah, I guess I shouldn't say a huge surprise, seeing as Intel shares are down more than 50% year to date. I think the timing, though, kind of interesting just in terms of the announcement. All right, let's talk about Nvidia, because it's obviously been the fan favorite this year. It seems like it's so much ahead of every other chip maker out there when it comes to especially AI. So is it poised to maintain its dominance as we think about next year?
Well, Caroline, as we look into next year, Blackwell is really going to have a transformational impact for Nvidia. However, what I would highlight is that unlike Hopper, where it was going in existing data center infrastructure, the Blackwell chip requires whole new data centers due to its power requirements. So we're going to see Nvidia benefit maybe a little bit at a slower and a more volatile pace than what we saw with Hopper, but we're also going to see the broader value chain like networking, power generation. All of those areas will significantly benefit as we go into next year.
So will that be enough to power the stock higher? Because I think that, you can't underestimate. It's up more than 180% year to date. But whereas we've seen new highs for the market, Nvidia is still 8% away from the highs. So it's, still seeing a really impressive run up, but we haven't seen the strength in the stock like we have some other areas of the market. Do you think that we'll start to see that again?
Okay, so let's touch on a few things right there. You guys know, I don't care how much a stock is up or down in a year. Doesn't freaking matter to me. That isn't what matters. What matters is valuation of the stock. And this is kind of what we talk about all the time in regards to a lot of folks talking about missing it and, oh man, the stock run, I missed it. No chance to get back in, whatever the case was. I've been hearing that about Nvidia now since 2023. And here we are at the end of 2024. And look at that right there on the right side of the screen there. The 52-week low was $45 per share. So if I'm not saying you would have timed that bottom or anything else like that, but you had plenty of opportunities to buy this stock under $100, under $80. I don't know how long it flailed underneath $50, but you had significant amounts of time to add to a great company just in the past year. So whenever I hear things like that, and remember that we're in December, guys, so that's, basically essentially everybody was saying, oh, it's too late in 2023. Well, I mean, you clearly were wrong at that particular stage because you got plenty of opportunities here in 2024 to buy a great company like Nvidia. So I kind of want you guys to keep those sort of things in mind, that especially whenever these stocks have these runs, they have these pullbacks, but you have earnings performance like Nvidia has given us for a very long time now. Really incredible performance quarter in and quarter out. You get opportunities because Wall Street gets dumb, and that's all that they are whenever you have great companies performing. That's why I prefer that modified DCA so much that we teach in my group there, because I'm not adding at 152 if that happened to be overvalued at the time, but I'm absolutely jumping all over it at $45 if that happened to be undervalued at the time. And same thing at $80 or $90 or $120 or whatever the case was. I'm letting valuation guide me on those decisions, not what the market's doing, not what the reaction is doing, not what the news and the headlines are doing, and not, who's getting elected or anything else like that dictate my investing. And when you keep it simple like that, it becomes much less stressful. But more importantly, whenever you zoom out a little bit and you look at a 2 or 3 or 5 year timeline there, you see how many opportunities you had for a great company to just continue to add shares, because share count is what matters in the end. And I want as many shares of a great company as possible.
Absolutely. As you see the Blackwell numbers come through in earnings, that's when you're going to see the stock rally up, the next leg up for the stock, right? So here it's trading right around the mid-20s on EV/EBITDA basis on 1 year forward. That's what we look at. And we think that's a good baseline for the stock. So the surprise really has to come from earnings. And we do expect a pretty significant surprise. We expect over 200 billion in revenues just from Blackwell alone.
So would you be a buyer on any Nvidia weakness?
Absolutely. It's actually one of our top holdings, so we're still holding it. We think there is some more upside in some of our other holdings. We disclose all of our holdings on our website in terms of near term, but we think when Blackwell comes through, that's when you're going to see the big leg up. So I think if you're a patient investor, this pullback is a pretty good entry point.
Okay. And just quickly, before we actually trade Nvidia, I do want to ask you just in terms of some of the competition. We really haven't seen anyone give Nvidia a run for its money. AMD is the one that we kind of home in on, but from a stock perspective, it certainly hasn't been nearly as successful. Do you expect others to start to catch up, or will AMD make more ground, gain more ground?
So interestingly, Caroline, this year we saw less competition than we had originally expected. The next leg of competition we expect will come from the hyperscalers developing their own chips. Marvell here is very well positioned to benefit. So they're working with hyperscalers like Amazon and Microsoft in bringing these chips to market. So we see that area gaining traction as we look into next year, as they already have the installed base of customers.
Okay. Ivana, stay with me because I'm going to go.
Okay. So interesting there. She doesn't see competition catching up anytime soon. I mean, I can't argue at least for the next year, maybe a little bit further than that. That's obviously been the case. Same thing was last year. It doesn't mean that I don't think competitors eventually will catch up. They will. Or whatever their next breakthrough is will just be done by somebody else. Maybe it is done by Nvidia. Who knows? Again, everybody's purely speculating, just like she's speculating. I'm speculating at that stage as well. So nobody knows. That's not really what our job here is to do. Our job is to figure out, based upon valuation, how does the stock look? And I don't necessarily go, well, Nvidia is outperforming AMD, therefore one's a great company, one's a bad company. It doesn't necessarily mean that. It just means one is absolutely performing better right now. And remember, it all comes back down to that valuation in the end, which just simply because you own number 2 or number 3 in the space makes it bad or worse or anything else of that nature. You just may not get the same performance and the same returns that you're getting out of that number 1. But again, so many folks view things in this very linear, there's only one winner and everybody else is a loser. Well, you can win regardless of what you end up choosing. What you're really trying to do is you're trying to avoid the losers. That's really what you're trying to avoid. Whether or not you choose the correct, bank stock where that bank performs the best and gives you the best return over the next 5 years. Sure, you want to do that. But I think you're pretty happy regardless if you happen to choose number 2 or number 3 as well, assuming that the businesses are performing too. They just may not be performing to the level that some of the other businesses are performing at. And that's some things you got to keep in mind is there's not one winner and everybody else loses. There are hundreds of great stocks that are going to return incredible over the next, 2 years, 5 years, 10 years, whatever the case is. That I know that's going to be true. And I don't need to choose number 1 through 5. I mean, it's great if you happen to do that, trust me. But there's still going to be stocks that are going to return thousands of percent during that time frame without you ever having to be in the top 5 in regards to picking the top 5 stocks or anything else like that. So don't get that sort of thing stuck in your head there as you're kind of looking forward in regards to stocks.
I'm going to turn back to Ivana. We're going to talk about Tesla. Tesla had a really impressive November post-election, up 38%. The momentum is continuing today. Tesla shares up 3% right now. There were some bullish analyst calls. Do you think that this momentum can continue for Tesla and, of course, for Elon Musk?
Well, Carolyn, we think Tesla is just getting started. There are 2 legs of the Tesla story that are underappreciated by the market. One is on the FSD side. We think that FSD was hitting some bottlenecks in 21 and 22, but with the new investment in Nvidia hardware, basically, the improvement in FSD is significantly picking up from each version to the next. So scaling laws are really holding. And this is really key for autonomy. And the second part is that with the Trump administration, we think that it's going to be a lot easier from regulatory standpoint to bring these autonomous vehicles to market. And that's a big step change, right? If you have a product but you can't bring it to market, it's really not worth as much. Versus now, we think that they're going to be able to do that. So those are the two steps that I would highlight that I think is going to power the stock higher from here.
Okay, so you say Tesla's...
Now, when I think about that, this is where I see the Tesla bulls get themselves in trouble. I'm looking at that and going, there's 2 things that got to happen. First, you got to actually solve it. Second, then you've got to try to get it past regulators and all that sort of thing. And people get all excited and it's like, well, we haven't even done step 1 yet, much less step 2. Regardless of whether you think, this particular admin is going to make it easier to get Tesla through the wickets in regards to regulation or not, that's one piece of the pie, but you got to solve it first. And we still haven't solved it first. I know everybody's all excited about 13. I remember everybody being all excited about 8 and 9 and 10 and every other version in between, showing that it's really, really close. But for me, until it's actually there, and again, I've heard the same enthusiasm every single version, really since 2020 when I really started following the stock closely until now, and everybody having the same exact arguments that they're having right now. To me, until it's there, we've got to hit that piece first. Then it's bringing through the regulatory piece. That would be second. The other piece that I don't know if she mentions or not that everybody has to keep in mind is, hey, that's great. It can be federally, allowed all day long, but then now you have city and state ordinances, county ordinances. A lot of other wickets here in the U.S. have to be hit in order for it to actually be, legal and able to be used on the road all the time. That's kind of the first piece. The second piece is, what is going to be the actual adoption rate of this? And whether we like it or not, or we want to admit it or not, there's more than half this country that doesn't want anything to do with autonomous driving and doesn't even want them on the road. So I'm curious as to how all these sort of things, I think it's just going to take a lot longer than a lot of things are playing out. She's saying that, hey, it could continue this run. And I'm thinking, wait a second, we hadn't even solved FSD yet. It might very well continue this run. Are we talking 5 years from now? Sure, might very well be then. But if we're talking about continuing this run into next year, I'm going, wow, we hadn't even solved it yet, much less any of the other steps that have to take place in order to do that. And they just take time. I'm not saying it won't get there. Absolutely, it will get there. They just take time. And you got to kind of keep that in mind in regards to, am I paying today for something that could be years off? People made that same exact mistake in 2021. A lot of people paid $400 per share, still haven't broke even yet on those shares based upon the fact FSD is coming soon, robotaxi is coming soon. It's going to add trillions of this and trillions of that to the market cap. and none of it's come true yet. Now you're 4 years later, and none of it has come true yet in regards to that. But yet that's the reason people were justifying buying back then. And I want to make sure we don't do that, because I said don't buy it back then based upon that, because that's pure speculation. And unfortunately, even though we are closer than we were 4 years ago, we don't know whether we're a year away or whether we're another 4 years away from getting there yet in regards to that speculation. So therefore, it makes it much, much harder to judge. And I'm not going to judge my shares and whether or not I buy or not based upon that narrative right there.
Getting started, what does that look like in terms of stock price performance? How much higher can it run if it's just getting started?
Well, it's really going to depend on how quickly autonomy gets adopted. Elon Musk has said that they expect to have self-driving vehicles on the market next year. We're going to see that sounds like a bit of an aggressive target, but if it's anywhere in the next 1 to 3 years, we think that that's going to be another $1 trillion in market cap for the stock. So as soon as you start seeing some real traction here on the autonomy side, I think you're going to start seeing some of the $1 trillion getting priced into the stock.
But here's...
So I want to make sure we're very, very clear here, because she's giving a very nuanced argument. However, you got to listen to what she says and understand. She's saying autonomous and all that could add $1 trillion to the market cap. Now, people immediately go to, and especially based upon how the interviewer phrased the question, what can continue this run? Oh my gosh, there's another $1 trillion to go in regards to the market cap. That's what we could hit. So therefore, Tesla right now is a steal, which if that was actually true, that would absolutely, I would agree 1000% there. But right there at the very end, she said, after this happens, after there's adoption, after it's approved and everything else, we might start that $1 trillion plus, market cap journey into it. Meaning it's not adding $1 trillion in the next year, 2 years, 3 years, like she gave a 1 to 3 year timeline. It's going to start that next level of that journey up. That right there, I can agree with. However, if you weren't really paying attention to the way she worded it, and more importantly, I don't think she should have thrown that out in response to the question. She should have answered the lady's question in regards to, okay, we think over the next year, as these things start to ramp up and as we get more clarity on FSD, maybe we see, a 450 price or something of that nature, as people start to price in the expected advancements in FSD and some of the take rate in regards to FSD. And long term, we see that could add $1 trillion plus to the actual market cap of Tesla stock. But that's not what she did. She just kind of jumbled up the answer to where a lot of folks go, see, here's an analyst right here who's showing you it's going to be $1 trillion jump up in market cap. And again, one, she didn't give her long timelines. Two, if you listen to her very, very carefully, we will start that $1 trillion journey once all those things start to fall in place and we have more clarity there. So I want to make sure that it's not because I'm not bullish on Tesla. I know there'll be comments down below, oh my gosh, you're a bear, you're not a believer, or whatever the case is. It has zero to do with that. It has to do with the fact you've got to understand valuation and understand how things get priced into a stock. And I'm sorry, if you start pricing it in today, the stock is going to trade down or flat for a period of years unless they somehow overperform Elon's targets, which that is not how it works with Tesla at all. I'm sorry, I love Elon, but in regards to timelines, he is always almost always significantly off. He's never ahead. He is always way behind because he gets over aggressive with timelines because he's excited. He sees the vision. He can see it there, but that doesn't negate the fact that clearly he gets a little bit over aggressive with that, a little bit overexcited. And it's one of the reasons why we lie. I'm not saying it's good or bad. I'm just telling you that's the reality, and banking on something coming early as opposed to what is more likely to happen, which is it's being late. That right there to me is not being prudent as an investor. So I'm definitely excited about that. I'm definitely glad that she has that as maybe $1 trillion market cap adder in the future, which I could see that. Somebody saying it's going to add $20 trillion. Okay, we'll see. Nobody knows at that stage. That's pure speculation. I hope so. I stand to win huge if I do. You guys forget, I own a lot of shares of Tesla. I stand to make a lot of money if I do. But in regards to that, I wanted to point out that nuance because it's something that a lot of people would miss. And a lot of folks will take that as, oh my gosh, they're thinking Tesla may add $1 trillion in market cap next year. And although that could be true, that would be severely overvalued again. And once again, we would be looking at a place where Tesla would stagnate or trade down for a period of years, which everybody told me was impossible in 2021. And of course, that's exactly what happened. And we would be in that same sort of situation again, which I don't want to be in, especially for you guys as Tesla shareholders there. But if we do, that's okay. I have my plan for it. I know exactly what I'll execute in order to do that too. And I'll continue to move on with life and take what Wall Street gives me in the end because I don't control that. Wall Street does.
There are already self-driving cars on the roads in certain markets. So there is competition in the space. And I think what gave Tesla the leg up is that it was so far ahead when it came to EVs. but it's not so far ahead when it comes to FSD. So how do you weigh in the competition here?
Well, I think that's the key thing that people don't understand. So 2 years ago, I think Tesla wasn't really as far ahead on autonomy. Right now, they're way ahead of the competition. So even though you see autonomy as a feature, to have a fully self-driving car, that's what's really would drive the upside in the stock. So autonomy as a feature is already somewhat priced into the stock, right? We've already heard about it for many years now. But having a fully self-driving car where the driver is not really in the car, that would be huge cost savings for companies that operate fleets, right, of vehicles. So I think that's really going to be, that's basically the difference between what we had in the past and what we expect in the future.
And you talked about the bullishness.
Which, when you listen to her point right there, that is much more of a business instead of a consumer driven demand there in regards to what she just said. Now, I'm not saying I agree with it or anything else, but I want to make sure I make that distinction there, because she was talking about it being a boon for businesses that operate large fleets of vehicles, not necessarily the consumer buying into it. And right now, the vast majority of the buys of Teslas are consumers. So again, you kind of see to where some of the cases there, you got to kind of get into the nuance of what's being said to kind of understand where that demand is going to be. I'm not saying there won't be demand there at that corporate level, but we saw with the Hertz deal, it didn't exactly go how we all thought. It definitely didn't go what all the bulls were out there projecting and everything else in regards to Tesla. So you got to kind of keep those things in mind and understand, I think that's a great untapped market. Obviously, I hope it happens so that way we win really, really big. But right now, the vast majority of the buys are over here on the consumer side, and she didn't really touch on that at all in regards to the demand for FSD at that stage. So let's kind of see where else she goes with this.
President-elect Trump being, a little less stringent in terms of regulation, but we did see Tesla stock rally almost 40% following the election. So how much of that is priced in, and how much more bullish are you on Tesla strictly because of his ties to President Trump now?
So, Caroline, if Trump hadn't won, Tesla would have been in serious trouble. So it was a bit of a binary decision, which makes now that he did win, makes the upside significantly higher. So I think if Tesla was not able to bring this vehicle to the market, like, the value would have really been almost overpriced at the current valuation levels.
All right, so right here is kind of where I get frustrated by Wall Street folks. Tesla needs to solve FSD, and who's elected president has nothing to do with that. So saying that Tesla's entire bull thesis is based upon who was elected president is simply not true. Now, maybe some of the regulatory hurdles and such might very well be easier, especially with kind of how Elon's positioned himself. Maybe at that stage, but to make statements like, oh my gosh, if it would have gone the other way, Tesla just would have fallen off a cliff. I'm not sure that's necessarily true either. I mean, it's kind of one of those deals we're kind of speculating on, because until Tesla actually brings something to actually be regulatory approved, who knows how it's actually going to play out. So we've got to have that piece fall before anything else falls. And jumping ahead, if he doesn't solve it in the next 4 years, then what? Now we're stuck overpaying, and now Tesla falls even further because of that. I think that would happen regardless of who was in office. That has to do with Tesla performing and getting FSD done, not who's in office, which to me is completely irrelevant. I don't know if they take away EV credits, does that hurt or help Tesla? I can make a case for both at that stage. Obviously, we saw with Tesla, despite the EV credits and everything else, Tesla still struggled for a lot of other reasons that are far outside the political sphere. So whenever I look at stocks in general, and whenever you especially want to throw in who's in office, who's not in office, whatever the case is, go look at the statistics, guys. The statistics show it doesn't matter who's in freaking office. Buy great companies. Buy great companies that are performing, and Wall Street always rewards that in the end. And great companies navigate the political landmines, the political fields, regardless of who's in office. They don't seem to care. The great companies always seem to perform. They seem to be able to work around any sort of regulation, any other sort of goofy things that happen out there. Now, sure, there's these one-off situations that happen that affect this company or that company, but generally speaking, it doesn't matter. Go look at the returns underneath who's in office. You can see very, very, very clearly the only losers are folks that invest based upon who's in office. Those are the only people that lose in the end in regards to investing. So this one right here, I think, is kind of a stretch. Obviously, I hope it increases the chance of getting regulatory approval done faster, but we need to actually solve FSD first, and we're not there yet.
But given that they now have a path to bring this to market, and we think that they're going to be able to even make deals with other U.S. automakers, right, that don't have self-driving, like Ford, right, that hasn't really invested in this. If this is a feature that's required, I think the whole market is going to move in their direction. So it's really like, it was a binary call. it turned out in favor of the stock, and I think that's really what's going to drive upside.
And again, I don't know how who was elected somehow gave Tesla a path to actually getting FSD done. I don't know. It means zero there. And I don't see any regulatory body, definitely not in the next 4 years, requiring FSD to be on every car that's sold here in the US. It's just simply not going to happen there. And she mentioned that as well. So if Ford doesn't have to have it, and if their customers aren't demanding it, more importantly, why would they pay Tesla for it at this stage? Now, I think that day will come one day, but that day, to me, in my opinion, is decades away. It is definitely not today, especially with our population makeup as it is. And I agree, you want to talk to, your average teenager out there, sure, they'd love to have it, but they're also not buying a $40,000 car as their first car. And more importantly, they don't make up the vast majority of car buyers out there. Obviously there's a lot of older folks, and a lot of folks my age out there looking at that who may or may not be willing to pay extra for FSD or even want it at that stage. So, it's kind of one of these things we're pricing in or starting to talk about a lot of things getting priced in today. And that's kind of what we need to be careful for in regards to Tesla stock.
Okay. All right. Ivana, really appreciate your insights on Nvidia and Tesla. Thank you so much.
Okay. So we'll go ahead and stop the video right there. And let's get down to the question. Let's answer the question of, would I buy Nvidia or do I think Tesla is the better buy right now? Now, let me caveat this a little bit with, I'm going to give you guys my answer, and my answer is based upon myself, my situation, where I'm at in life, my understanding of things, everything else of that nature. That right there is why I would choose to buy one stock over the other stock. And you have to understand it. So don't just take my answer and then run down in the comments to blast me regardless. Listen to the reason why. So that way you understand exactly what's going on there, because it's an important investing lesson that so many folks miss. And it leaves you in a spot where when things go bad, you panic sell. And whenever things are running up, you FOMO in at ridiculous prices. That is exactly what doesn't happen whenever you buy based upon what we're about to talk about next here. So for me, I would not touch Nvidia and I would touch Tesla instead. That right there would be my buy, would be Tesla. However, that is not because I think Tesla will outperform Nvidia in the future. I have no freaking clue if they will or won't. I think both are great companies. I think both will perform very well in the future. Which one performs better? I have no freaking clue. The reason why I chose Tesla is because I do not invest in the chip industry at all, because I don't understand it. I don't understand the business models. I don't understand what makes it tick. I don't understand the cycles. I don't understand any of those sorts of things from a business perspective. So if I owned Nvidia, I wouldn't know if a dip was an opportunity or if it was a red flag. I wouldn't know if it went on an epic run like it has been, whether or not it could keep going and the business could continue to evolve and shape and the demand continue to still be there, or was it just a cyclical thing and it's getting ready to fall off a cliff? I can't determine any of those sorts of things because I have no expertise in Nvidia whatsoever. So for me, and in regards to chips in general, I have nothing in regards to understanding at a high level of that. I can speak about stock. I can speak about overvaluation, valuation, all those sort of things. I can speak about the stock itself. But when it comes down to not getting shaken out of stock and understanding opportunity from a problem or anything else of that nature, I can't do that with Nvidia. I wish that I could. It's just an industry that I'm just not as familiar with as I am with other ones. So for me, I can buy Tesla and feel very, very, very comfortable knowing exactly what I own. I knew not to buy Tesla at $400 per share because it was crazy overvalued, and I understood why. And more importantly, on the flip side of that, as it was falling and it was down at $100, $120, whatever the number you want to throw out there, whenever it got under $200, I knew to buy the stock like crazy because I understood what I owned and I could see the opportunity. Same thing this year. It got beaten down in the low 140s. I knew to buy then. 169, 140 something were my buys this year, just this year in Tesla. And it was easy to buy, so easy to buy because I understood what I owned. I understood and saw the opportunity. That's it. I can't do that with Nvidia, so therefore it makes no sense for me to buy Nvidia stock, and it makes all the sense in the world for me to buy Tesla whenever it gets down to my valuation and to my price target that I want to add Tesla at. So that for me is why I have it as a buy, and that more importantly hopefully illustrates the lesson that you don't just buy stock because you think it's going to return better. You have to understand what you own, or else you're going to get shaken out of that stock. You're not going to be able to spot opportunities as easy, and you're not going to be able to spot problems either as easy, which is a bad place to be in as an investor. So make sure you don't do that. And if you want to understand how to do a valuation on Tesla, you want to see my price target on Tesla, you want to see all my buy and sell alerts on Tesla in real time, and actually all the stocks that I own, make sure you check out the pinned comment down there. Take advantage of the biggest discount ever for my group, where you can see all that in real time. You can take 5 courses, get your free coaching, be a part of the best 6, 7, and 8-figure Discord out there. Tons of exclusive videos. Guys, there's just so much involved in the membership. Make sure you check out the pinned comment and see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.